right, guys, we're back again with another great episode of PFREI. I'm your host, Fuquan. Today we have Brock Mogensen. Now, today we're actually going to switch it up a little bit. We had a few guests on for a while, and we covered a lot. Today we're going to really try to dive deep into what's happening now in the current situation we're in, and we're going to see where Brock is at and what he's doing and what he's up to. Now, Brock, I'm going to let you tell a little bit about your background. He's from Smart Asset Capital. Talk a little bit about your background, share with our viewers, what is it exactly you do in the real estate realm, and then we'll get started from there.
Absolutely, yeah. Thanks for having me. So, yeah, as far as background, I've been in real estate now for a little over 2 years. Probably a year prior to that, I started the education process about 2 years ago when I did my first deal, and that was a duplex, which I started with the house hacking model. So I did that, moved in there, and it really kind of just showed me, the components of real estate, how cash flow works, and just kind of really got me interested in it. So from there, I kind of decided, spent some time deciding which path in real estate I wanted to go down. There's a million different paths you can go down in real estate, and that's one of the reasons I love it. But I ended up choosing syndication. And once I chose that path, I took the next 6 months or so and really just learned the process of it, and chose specifically to become fluent in the underwriting section of the whole deal. So from there, I spent the next 6 months learning that. After that, I went out and found partners that I'd say kind of lacked maybe in that realm of the analysis side. So once I did that, partnered up with them, and they had more experience. So instantly we were able to kind of do some larger deals. We bought an 89 unit deal shortly after that. And then more recently, we purchased an office building in a strip mall under Smart Asset Capital. So that was about a year's time frame there. And it's been good. That's really kind of the real estate background I've had so far. So it hasn't been anything too long. It's been about 2 years for me.
Now, the one question I always ask my guests is, why are you passionate for real estate investing? Some people, get in it and they see people making money and it's, all glitz and glamour. Then they get in and see, it's real work. So why are you passionate for real estate investing?
I really just think the model works. The cash flow model. I think it's just a strong model. There's just so many components. It's tried and tested. So I think really what attracted me to it was the ability. Obviously, yeah, it takes a lot of work, but having that long-term goal of one day you build up enough assets, and you build up the right systems, and they essentially can almost run on themselves, far into the future. Obviously, you're always to be involved to make sure everything's running correctly. But I just love that there's so many different ways to plug systems into real estate, and just going back to how much different ways there are to make money off real estate really is what attracted it to me.
Yeah, I wanted to switch it up with the guests I was interviewing. You're pretty new in the space, so you haven't been market cycle tested yet. This is your first recession, so I wanted to kind of get the point of view from someone who's new. A lot of the guests that's on the show, they've been in the space for 20 years, 10 years. Myself, I've been in the business for 20 years. I've been through 2008 through 9/11, and learned a few things there, and still learning things now in this current COVID-19 situation. You started off, doing syndications, doing multifamilies. Now, that sector is being hit pretty hard. Some people are saying they're having success with the rental collections. Some people are upfront and really talking about the challenges that they're having. How is that affecting you, and what are you doing to pivot, in this current situation? Because if you just started a couple of years ago, the market was at the peak, 2 years ago. So you got in during the peak of the market. Put a syndication together, got a few deals. You mentioned that you have, commercial, which is being crushed right now, the retail business. So how is that affecting you?
Yeah, that's a great question. So yeah, you're totally right. I mean, I got in at, maybe not the best time, obviously, right? And we actually talked about unlucky timing. We bought a strip mall in early February, so really before all this stuff hit. So yeah, I mean, I'm definitely, we're pivoting our model quickly. I think going back to really, I'm always conservative on underwriting. So we made sure we're buying at the right price. So we never really overpaid for anything, and the numbers are right, where our break-even occupancy can still handle a lot. So kind of heading into this now, surprisingly, actually, our office building and strip mall collections are doing better than our apartments. That's kind of backwards compared to all the national data. But really how we're pivoting into this is just constant communication, I think, is the main thing. So I kind of talk more specifically about the apartment building. So we're talking with our on-site property management team every other day, pretty much, always making sure that they have the tools they need to whatever that's going to help them the most get rent collected. So whether that be putting in contact with different programs in the area that are going to help with rent collection or offer loans or rent assistance. We're making sure that our on-site is completely trained on setting people up with unemployment and everything, and that's really helped. We have a great on-site team. That's super important in these times to make sure they're competent enough to go in and do what they need to do. So I'd say there hasn't been anything out of the box that we've done compared to all the other operators. But really, I think the main thing could just be summarized in constant communication with the team.
And have you guys stopped paying your investors? Most of the syndications and funds, they're increasing liquidity and building reserves. They're not doing any distributions. Even Grant Cardone, the biggest guy out there, is following the same suit. I was on a call with a bunch of fund managers, and that was the talk. Let's build reserves, increase liquidity, no distributions for Q2 and 3, and we'll see what happens during Q4, whatever. Or if they're paying a pref for some people who wanted to get paid a pref, it's a mixture of different things going. What have you guys done? How have you pivoted when it comes to that?
Yeah, so we pretty much told our investors, for Q2, don't expect anything, and then we'll kind of reevaluate in Q3 and Q4. And everyone understands, right? I mean, no one's getting paid. You're not making money really on any investments right now, and beside a specific few. So yeah, we were straight up with our investors right there, and they all understood. So I think really our plan is we're gonna go through Q2. We'll see how Q3 and Q4 go on, but I wouldn't be surprised if we just withhold distributions for the rest of the year and just continue to stack up those reserves. Because I think with an unknown future, no one really knows where this is going to be 6 months from now. I'd rather go into it with a stronger reserves, and then if we get to that point where stuff rebounds, then we can just pay out those reserves. No harm. So that's kind of our look on it. Is let's just continue to build up reserves, not pay anything out right now, and then reevaluate as time goes on.
Yeah, the only thing that sucks about that, because I was talking to my SEC attorney about that, and you have to update your documents, that you have to disclose if you do a new syndication that you didn't pay investors, because usually it has language in there, investors got paid, investors didn't get paid. So that's the only thing that sucks about it. But I think everybody will understand, because that's the lay of the land. Everyone is doing that. So during this time is like, if you got a homeowner, somebody got a late on their mortgage and they try to refinance it and it was during this time, they'll get it, they'll understand it. But it's, what do you see? Are you really looking to see if there's going to be opportunities that's going to come out of people who are over leveraged and looking to get liquidity and sell? And if they are over leveraged, how do you get that at a discount? Because if they pay too much for it, they still owe the bank. So, how do you get that product?
Yeah, that's a good question. My take on it is, so we actually had a deal under contract right when all this hit. And luckily we're at the point where we could still pull out of it and not lose anything. So we did, just because we weren't 100% positive on it with what's going on right now, because it had a good retail component to it. So that doesn't directly answer the question, but kind of shifting from there, I really think kind of Q3, Q4 is when deals might start popping up. I think it's too soon right now. I'm just speaking from what I've been seeing. I haven't seen anything. I'm still seeing deals kind of trade at prices they were, 2 months ago, which I don't really think makes sense given the risk that's in there now, especially with the lending markets, all the requirements they have. It's really hard to make a deal work when you start factoring in 12 months of, reserve payments that all the lenders are pretty much requiring right now. So I'm kind of, my take on it and our take on it is we're just telling investors to kind of, be ready, keep cash ready, and kind of look for more opportunities a few months down the road coming into the fall is kind of my take on it. We're still looking at deals, but we're only going to kind of put one under contract right now if it's a a real home run. More so looking to wait a few months and kind of reevaluate as time goes on.
So what's up with the tenants? Let's dig into that a little bit. What's your collection looking like for, the last the end of Q1 and then going into now, May. Like we've seen the dip month by month, and just wondering what June is going to be like. May is not over yet, but we already have some late payers and some stuff like that. We had 85% collection last month. So far, we have about 70% collection. It's still early. People are paying late. Some people payments are due on the 15th, the 1st and the 15th. So we'll see what happens. What are you guys seeing?
Yeah, so the months prior to April, we were at around 98% collected, just to give an idea. April, we were at, for that, I'm just talking about this one apartment building right now. I'm not considering the other assets. We were at 87% in April. So we did see a dip there. May, so far, just looking at it, we're kind of on par with April if you look at what day it is this month compared to last month. So I'm hoping it kind of stays the same. I wouldn't be surprised if we see, a few percentage points lower in May. But so far, it's kind of trending in the same direction as April. So I don't want to speak too soon because I'm really hoping that we either beat April or stay in that same ballpark.
You and me both.
Yeah.
What have you learned from this whole thing? I mean, it's your first downturn. What processes are you putting in place to kind of protect you from, going through this again? Like, what would you have if you had the crystal ball and you can see this? What would you have done differently before this pandemic to kind of insulate yourself from being affected? How would you have underwrote the deal different, or, would you still be in the same asset class?
Yeah, that's a good question. I think so. Maybe first off, I think and most people were doing this, and there might be a few people that were smarter that weren't doing it, or maybe just not leveraging quite as much. We did 80% LTV on this deal, and it seems like that was kind of common for most people to do. I think going forward, I'm going to look more at 75%, 70% LTV, just you're a little less leverage there. And also, I won't say that we're going to get rid of the C class type deals in the future, but I really like to kind of stay. So that apartment building is C class, right? And that's obviously they're getting hit much more than the B and A class right now. I'm just given the tenant base. So going forward, I would really like to focus more on that B class, even B plus. It just seems like, something like this, it might not be affected as much, and they're more insulated from a lot of the different stuff that can happen with the economy.
That's awesome. And what can you tell someone new who's looking to get started? Like, there's been a lot of people going to seminars, learning how to do multifamily, who was eager and excited to get in, and then boom, COVID-19 hit. So, it's still, keep the faith and keep going. Like, I love real estate. I'm passionate for it. What can you share with someone who maybe just getting started? Like, what inspired you, to do what you do?
Yeah. So, so what I usually tell people when they want to, especially if they're looking more so to go, bigger and either it's a syndication route or looking to partner and go on bigger deals, I always tell people, instead of when you're just learning it, obviously you have to understand the different components of it, but don't try to become an expert in the whole subject of it, because there's a million different things that goes into these big deals. I tell everyone to pick one specific piece of the puzzle. For me, that was the underwriting. Like, some people, it could be the asset management or raising capital, whatever piece you decide to choose, and really just become fluent in that piece, and then plug in with other operators and investors that are strong in the other parts, and you combine everyone together, and you got the whole puzzle. So that's kind of the outlook I took. And then obviously now I'm learning the other pieces of the puzzle and try to become, fluent in the whole thing. But it really takes some time. Obviously, speaking to someone like yourself and doing it for 20 years, I can learn a lot from someone like yourself, being new. So, but that's kind of what I tell people, is just become an expert in one piece at first.
That's awesome. That's awesome. I appreciate you coming on the show today, man. Another great episode of PFREI. I'm your host, Fuquan. You can catch us on all the social media channels, Instagram, Facebook, and all that good stuff, iTunes. Thanks a lot, Brock. I really appreciate you coming on, man.
Thank you.
All right. Thanks a lot. Have a great day.